All right, hi there, guys. Very good day, a very good afternoon as well to some parts of the world. And welcome to today's Bretton's Mondays webinar. And today is the 19th of April 2021. So in today's webinar, we'll be looking at the week ahead from the 19th of April right up to the 23rd of April. So a couple of things to discuss, but we have maintained our focus on what basically we will be looking at for the week ahead, especially with trading opportunities and risk events that we need to be aware of that would actually create both opportunities as well as a risk in terms of volatility that's caused by volatility. So volatility is always the lifeblood of the Forex trading, the reality of Forex trading, and it would pose both opportunities as well as risk. So we want to take a look at that. Now, just before that, I just want to keep the traders aware of the website where you can actually, it's Bretton.institute website, and it would be directed to Bretton.academy very soon as well. So we're getting that set up. And for those who want to sign up, know a little bit more about our certification programs, our webinars, workshops, seminars, our membership as well here on Bretton's membership, you can easily go on to Bretton.institute, find out more there. We've also got ourselves on Facebook page, Bretton Financial Trading BFTA page, and also on YouTube as well. So with YouTube, we've got the YouTube channel, Bretton's YouTube channel as well. So all the recordings of our webinars will actually be posted on the YouTube channel, Bretton's YouTube channel. Okay, so we've got a lot to look at, and a lot of trading to actually do and to focus on opportunities, but most importantly, to look into the risk element as well. So before that, I just want to go over with you on what the market looks like, especially from the fundamental side of it, with economic calendar, what are the risk events that we are actually expecting. We have got no high impact news on Monday for today, but then starting tomorrow, Tuesday, the 20th itself, we've got a list of events, of risk events, and that starts off with the Chinese interest rate decisions right down to consumer CPIs, CPI, as well as unemployment rate from the UK, as well as we have got for antipodian pairs, for antipodian currencies like the Australian dollar and the New Zealand dollar. We're looking into the central bank's meetings as well as decisions to be made. But then with New Zealand dollar, we've got CPI. So as you guys can see, we've got quite a nice line of events that may actually be creating lots of volatility. But my focus as a trader for this week is actually the Bank of Canada and also its interest rate decisions, and also looking at opportunities on commodity currencies, because it might be driven by Canadian dollar. So we have got that starting from Tuesday onwards. Of course, I think investors and traders would actually focus on that. But on Wednesday, 21st of April, we're looking at a very nice, good list of events concerning Canada. So we've got it starting with the CPI, we've got the Bank of Canada's rate statement, we've also got monetary policy report, down to interest rate decisions, and also the meetings, press conferences, and all that. So that would actually be looking into more creation of volatility for the Canadian dollar and its crosses. So I'm looking at loads of opportunities right there, but we want to take a look at the market from now on and to actually look at heat maps as well. So I'm just going to go on to my favorite Forex early warning heat map right there. Just give me a second. So we've got two versions for those who have just joined us and it's their first time. I'm always looking into the fundamentals aspect, looking at market analysis, then trend analysis out of the chart. Before we enter into the chart, with spotting patterns and drawing all the relevant and necessary support resistant lines, and then looking for opportunities, exact entries, exits, as well as stop losses. So all that comes later on after we are actually sure about the trend as well as the direction of several pairs. But the most importantly is to actually be able to find or to pick out the best pairs to actually trade for the day, because it will then need to actually match with your style of trading, whether it's short term, whether it's scalping, intraday, mid-term. You want to leave it because you are busy working all day. You want to just go into the market, look for opportunities, and then put it on a pending order. So all that needs to actually be taken into account. Okay, so let's just take a look at this. All right, traders, we've got this heat map right here. We've got both the Asian sessions, this was a European session. We have seen Asia to actually just be picking up a little bit because it needed to absorb last week's losses from what has been a tailwind from the Wall Street side of it as well. So hence the reason it's just been picking up. Now with regards to the dollar, it is actually still on the downward momentum. We're looking at the DXY or the USD index as well, very close to the resistance area. It's heading downwards as well. So we're expecting weakness for the US dollar. Hence the reason we're focusing our interest on the Canadian dollar and its crosses. Okay, and I see that that's loads of opportunities there, together with some selling on both the European, the euro, as well as the dollar. So as of now, as we can see in terms of volume or interest of traders and investors, we're looking at the bulls for the other currencies as opposed to the dollar. So as you can see right here from Asian session itself, we have got more we've got bias to the upside for other currencies as opposed to the dollar. So we're looking at dollar right here as well, especially the USD versus the yen, USDJPY being really bearish as well. So we're looking at all the, a little bit of a mix when it comes to the USD crosses at this moment of time. So what I would like to focus on is some steady flow of both trend as well as liquidity and volume of trades by traders. And that actually is looking like it is favoring the yen crosses. So the yen crosses here is looking quite steady for today in terms of selling the other currencies, but then a lot of buying is actually taking place. So I think it's also, give me a second, let me just, all right. Okay, so what we are looking at is not only the Canadian crosses, but also JPY crosses, because we've got loads of selling of the other currencies. So it looks like there's a bit of a safe haven type focus at the moment, especially on the Asian side of it. So that actually means there's a lot of buying on the safe haven like the yen in particular. So we want to also take a look at the diminishing interest in buying the dollar would actually then encourage buying gold as well. So we want to correlate that. We've got some positive numbers in China. So with the Chinese data and upcoming Chinese data as well is expected to be positive. So that might reel in some opportunities of buying AUD and NZD crosses. But we're looking at some AUD crosses here that are picking up in its momentum in the buying side. And I think that would follow suit by the New Zealand dollar as well. But if we focus on opportunity in terms of the interest by traders and investors on the outside, I think it would actually be looking at a lot of JPY interest in terms of buying the JPY crosses. And if we look into the Canadian dollar per se, it's not reflecting that as yet. Maybe it's still too early. But then because we have seen the economic calendar itself, it starts on Tuesday onwards, right? So it starts tomorrow onwards, where you've got a line of economic data releases, risk events concerning the Bank of Canada's rate decisions and various other connected events. So I would guess that would also pick it up and would actually pick up, but then the combination of JPY with Canadian dollar may not be that great, mainly because both are into the same direction on the upside. Perhaps it's attracting more bulls on both. So, excuse me. So we want to actually really have that balance and understand that we need to actually combine pairs that are in total opposite directional trend, and then be sure of it and then combine them together. Okay, so here again we looked into the yen. It's looking really nice with very steady bars that are quite long, and then we've got shorter bars here in the Asian session, but then as it comes to the European session, it looks like the bar size is actually increasing, reflecting more interest or even liquidity and trading activities taking place. And that's actually more of selling the other currency as opposed to the JPY. So all JPY crosses, basically, they're buying the JPY and selling all the other currencies. So now we take this, and just to get a little bit more idea on the overall market as well, let's go on to Action Forex top movers, just to get an idea. It's not a highly accurate type tool that I usually use, but it gives you a bit of an idea. Hence the reason you need backup, not to actually rely or be dependent on just one tool, one website. It's really dangerous to do so. Okay, so now let me just go into the top 10 movers right here. Now, on the top 10 movers on Action Forex, it's quite an interesting tool. You can actually just have a bit of a bird's eye view on the top 10 currencies that are focused on by majority of the traders and investors. So here, as we have actually gone on to the heat map and look into the JPY's interest on this table itself, it is sort of confirming to us that we've got lots of traders and investors out there focusing on JPY pairs, and indeed they're actually selling all the other currencies and they're buying JPY at this moment of time. And now, whether or not that is still the case, we need to actually confirm with our charts and to look at it matching with your style of trading as well, whether it is for intraday, whether it is midterm, long term, and all that kind of thing. So here, for example, if we take a look at the change column here, it is giving us that hint that it's on a negative symbol right here. So it's on negative, meaning on the base currency, they're actually selling. If it's positive, they're buying the base currency, right? So here you can see the Euro JPY, you've got selling 0.4. And then that selling takes place on the top 3 as well. And they are all about, I think, all top 6 has got JPY in it, and Euro JPY being the first one there. So I've got Euro JPY on my chart as well. We want to take a look at that. I've laid out some opportunity for Euro JPY, GBPAUD as well, if I'm not mistaken, and various other pairs, and want to take a look at gold and all other pairs that you guys want to take a look as well. So here, for example, in terms of clarity of trend, in my guess, it looks like you've got 4 dots all across 4 hour right up to the monthly for 2 pairs, and that's the CAD-JPY and the USD-JPY. But it's no harm to actually really focus on JPY pairs as well as the Canadian pairs, so that we can actually be focused on the Canadian pairs, expecting loads of volatility coming from Canadian pairs as well, so that then we can lay out our opportunities quite well. Okay, so I want to share with you guys as well on trading range as well, together with patterns, geometric patterns. So we want to look into the charts in looking at that, because we have got a very slow type movement in terms of data releases today, Monday the 19th. So we have actually seen that there's a couple of pairs that would pose lots of opportunities for us, but it still hasn't broken out, or we are awaiting the breakout. So how do you actually trade in within that range as of now prior to the breakout as well is quite important to know, because it's a continuation. So a continuation could also be a continuation of that consolidation or sideways market. A continuation can also be continuation of the uptrend, a downtrend, and the sideways, as I've mentioned. Okay, so we want to follow the flow and ride the trend. Whatever trend that's given to us, we need to understand how do you actually trade it. So hence the reason, maybe when we go into the consolidation period, we might actually be trading it, maybe no patterns, but what do we actually do? Do we rely on some good indicators together with price action? So something like that. So I want to demonstrate that. So let's look into, we've got top three at the moment. I'll write it down as well. I just want to take a look first. The Euro JPY, the CHF JPY, as well as the NZD JPY. Okay, so this needs to also sort of tally with what's going on in the economic calendar. Okay, the only thing is, as you can see, you've got number 5 CAD-JPY right here, right? Why CAD-JPY is not right at the very top as well? Also because of the direction. Okay, so we want to look at one on the upside and has got a marathon of upward type movement or uptrend, and then we want to look at the other with a marathon of selling pressure. Then we can actually match that, opposites attract in a way. So that's basically what we want to look into when we come into picking the right pair to trade for the day. Okay, so there's just not so much interest at the moment with major pairs, as you guys can see, because it revolves around commodity currencies and safe haven like the JPY. So in looking at all this focus, we might actually be able to do a little bit of an intermarket analysis, connecting with currency stocks, because we've got earnings coming out as well. Yeah, so this week is quite a busy week for earnings, bank interest rate decisions for Canada especially, and various others. So we're going to take a look at that a little bit, but we want to combine bonds, the effects and the current news revolving bonds at the moment, stocks, because we've got the earnings as well, currencies and commodities. They all need to be looked at, and we call it intermarket analysis because they intertwine and they actually impact one another. And these are the major themes that we need to look at. Okay, there you go, guys. So we've got that going on. Euro JPY, CHF JPY, NZD JPY being the top three traded. We're seeing loads of interest in buying the JPY from the Asian sessions coming into the European sessions, and later on with the US session as well, I would presume. So here we want to go on to the currency heat map as well of Action Forex, just to see whether we've got a bit of a match with the early warning, Forex early warning heat map as well. Now here, as you can see, all currencies is said to be really weak against the JPY and the GBP as well here. All right, so as you know, JPY, GBP. So JPY and GBP is looking like it's on the upside. So we've missed that on the Forex early warning right here. So we just want to look at GBP. As you can see, is not as attractive in terms of the participation. The bars are not very long when we look into, if we compare that to JPY pairs. Okay, so JPY pairs has got more interest right there. As of now, maybe it's a little bit early, but we want to monitor that as well. But then when we went on to the Action Forex, it's already telling us that there may be some, trend clarity in terms of the GBP pairs being strong against all the other, or being bullish against all the other currencies. But as we can see, Euro, for example, was good in terms of participation in the Asian session, but it's still not yet picked up, not yet giving us clarity as well in the European session. GBP as well. So hence the reason I think the JPY pairs for now, and then later on, we can actually look into the other pairs as well, just to be on the right side of the market and not to actually waste our time looking at other currencies or analyzing the other currencies that basically has not gained that interest as yet as of now. Okay, so we want to ride along so that we can time manage ourselves much better, get the technical grounding properly, and then set it to pending order or even trade it on the spot. It's entirely up to yourself. Okay, so let's get back to this one here, and we want to look at currency specifically as well. We want to look at the columns to be either dark red. All the four rows here to be dark red would actually be ideal, meaning that it's very bearish for dark red and very bullish for dark blue. So if we go straight into the JPY pairs, as you can see, versus the dollar seem to be ideal. The rest, it's just starting to pick up its bullishness because it's light blue. It hasn't actually turned into dark blue yet. So the dark bluest one is the USD versus JPY, where USD seem to be very bearish against JPY. JPY seem to be very bullish against the USD. But then when we go back to here, it is still not really looking, it's looking not too bad in terms of participation for the USD. But when we look at USD JPY, yes, amongst all the majors here, we've got some participation here. So that could actually be one of the first ones that we can actually take a look when we get to the chart. I just want to also look into the action bias right here, just to tally match or just to match it up a little bit. And we want to look at all straight rows, and there's nothing yet going on. I would like the whole row here to be either an up arrow in blue or a down arrow in red, starting from the first hour. So if you've got the first three columns right here for USDJPY, so this is also an indication that we should be looking at USDJPY. It's got picking up interest, volume, and everything else going. So maybe we can find momentum and volatility there as well. So let's take a look. Now we will go onto the chart. Now, I have lined up some pairs right here, and I will be feeding traders more trading opportunities with specific videos on each pair, very short ones to give you entries, exits, especially for our members. So these are meant for members, especially the trade signals side of it. So members, you can join Bretton Institute subscription monthly. It's only $10.99. It's an early bird thing, but you've got loads of value in it. You've got trade signals, entry, exit, stop losses, and it's all live videos, and it's all me drawing it, giving you the fish, as well as teaching you how I have actually fished on that signal, for example. So this would be very beneficial for you in brushing your skills, as well as pumping up your account in trading results. Okay, so there you go. Here we've got Euro JPY here, but let me just pull out. We've drawn a couple of very good levels. That's for Euro USD right there. So I'm just going to shift that right here. Give me a second. So I'll move this here actually. Okay. Euro USD. That's for Euro USD. Let's take a look at USD JPY as well very quickly. Okay, so Euro USD JPY, it's definitely given us lots of hints on the downside preference or bias to the downside, okay, being bearish against the JPY. JPY, as you guys have also seen, it's got loads of bullishness picking up. But in terms of timing, we need to be really careful with that. We cannot get overly excited just with the word bearishness or bullishness or downtrend or uptrend. We need to have that measured. Now we are on a second stage with technical analysis side of it. So we still need to do a trend analysis based on the technical side of it. So USD JPY, for example, let's start off with a lower time frame like the 30-minute chart. Now, 30-minute chart, you're looking into the 1 hour. You're always looking at one time frame up. So if you're monitoring the 30 minutes, you need to also connect that with the 1 hour, and then it gives you a better picture. Okay. So with 30 minutes to the 1 hour chart, we are looking at similar thing, meaning that candles are under all the three lines. Your three lines, let me just get rid of all these ones first. Okay. By the way, I don't really use indicators. Indicators are mostly for trend analysis purposes, so not for entries, not for exits. We're using entries and exits based on the geometric patterns that are drawn, or purely price action. That's how we actually enter, exit, and also decide on the stop loss of the currency pair or any instruments that we trade. So here, for example, as you can see on the 30 minutes chart, it's got a nice flow to the downside in terms of the three lines. And three lines are your exponential moving averages, or EMA. Now we've got majority of candles. You need to look at two things first when it comes to the three EMA. The three EMAs, we've got the 50, 100, and 200 EMAs. Now you need to look at how the EMA lines themselves are actually flowing. If they're flowing like a river without touching each other, without being entangled as well, to the downside or to the upside, that just gives us that trend direction and that clarity as well. But we need to confirm the clarity one time frame to another. So we'll run through and match 30 minutes with 1 hour, with 4 hour, and up to about daily. If you want to go higher as well, it's no problems. You just get more data and more clarity as well if you're going on to higher time frames. So here on the 30 minutes chart, we have got the flow of the river in terms of the three EMA line is to the downside. So that is generally giving us the hint of USDJPY appearing to have the downside bias. And then you look at, secondly, you look at the candles. Candles need to be under all the three lines. If the direction of the three lines is to the downside, that means it's downtrend. So if the bias is downtrend, you need all candles to be under all the three lines as well. So once they're actually all under the three lines, we want to do something really specific to Bretton's Financial Trading Academy, or even my style of trading, is to lay out the two psychological levels that the current price is trapped in. Okay, so here you have got the current price of USDJPY right now is trading at 108.55 area. So that 0.55 is really close to a psychological level at the top and a psychological level at the bottom. So we need to draw two horizontal lines just to look at where the current price is trapped at in between which psychological level on the upside and downside. So it's quite simply done. We will have videos on that specifically on psychological numbers, because psychological numbers, I've been trading with it and through experiments of over 1,000 charts, with all kind of instruments, including mainly it's specifically for currency pairs. So then it's covering your majors, your exotics as well, all instruments within currencies. But lately, we've also found that the psychological numbers that I use, especially the 00, the 50, the 20, and the 80, seem to be very applicable to oil trading, both UK oil and US oil, Brent and WTI. Okay, so I think it's a good way to actually use the psychological numbers, especially for your entries and exits. Okay, your entries and your TPs, and this is how we are using it. So now let's just lay that down first. If the price were to actually head lower, of course you'll meet the 108.50 psychological level, but we want to lay down the 108.20 as well, because the 108.50 psychological level is just too close at the moment, just 1-2 pips away. So we want more room. So what we do with the psychological level as well is to alert us on where could the reversal be. So if it is actually heading downwards, it could actually reverse very close and within 10 pips of that 108.20. Okay, so if you're actually selling right now, make sure you are looking into exiting before it reaches the 108.20 area. But then I want to also lay out another level at 108. 108 as prices appreciates further, let's say if it does appreciate further, the next psychological level that would actually reverse the price would actually be at 108.80. Okay, so we'll talk a lot more about that in specific video tutorials concerning psychological levels or psychological numbers. So 10880. Okay, so we've got 10880 right there. So now we have got a zone. Now I will then highlight this zone right here. Okay, give me a second. This is more like a no trading zone, NTZ. Okay, I think we've got. All right. I think my screen has been paused. Give me a second. All right. I think you guys can see my screen now. Not sure what happened, but can you guys see my screen? Yeah, hopefully it's all okay now. Okay, I think I've clicked onto the button accidentally right here. So we've got it now sharing. Okay, so now as you guys can see, we are on 30 minutes chart of the USDJPY. I've laid out two lines, 10880 as well as 10820. I'm seeing more room to the downside, but expect a little bit of reversal at the 10820 area. So what that means is that since we're looking at a bit of a nice flow of trend to the downside between 30 minutes to 1 hour. So short term, yes, we can see a little bit more room to the downside for USDJPY, but I would expect a little bit of a correction or corrective move very close to the 10820 area. But we need to look to the left as well, just to get a bit of an idea what's going on. As we can actually see, if we look at it from a bird's eye perspective and zoom out a little bit, then we can look to the left and then know that at the moment, because the price is so close to a psychological level of 10850 and price is actually heading downwards, it may actually want to reverse. And that reason of reversing could also be justified with the movement to the upside of the previous move. Now, as far as the eye could actually see, we can see that this area here has proven to be quite a significant support area. And now prices, current price of USDJPY is simply flirting at that area right there. So that opening price of a bounce to the upside previously, that actually happened, let's say, that's this year itself in March, okay, last month, somewhere around the 24th, 20th week. So then here it has actually appreciated about 200 plus pips, okay, less than 250 pips, but then it has appreciated quite steadily to the upside. So that's quite a significant upside type move that needs us to respect that level right there. So that would actually then justify two things. One is a psychological level as well as that previous price movement to the upside previously. So this might then give us a hint that we need to exit now if you're already selling, just so that we can ride along again and open more trades for USDJPY on the selling spree, but later on. And now perhaps it's just playing around that zone right there that I have actually marked it in red for the USDJPY. So this is still a downward type movement. We've got candles under all the three lines, but the way the three lines are moving on the 4-hour chart, which technically also means it's from the 1 hour to the 4 hour, it's not really that clear, and it might signal some reversal coming really soon, mainly because of the entanglement of the three lines. The three lines, as you know, it's not moving like the 30 minutes or the 1 hour, whereby it's just, you know, really nice flow to the downside, all three lines without touching each other. But then when you go onto the 4-hour chart, it suddenly have got this entanglement right here. So as you can see, you know, it's a very different approach of using the EMAs or even MA in general. I use it only to indicate trend, so not crossing to enter and exit and all that. That's all old school. We just need to look into practical, realistic way of actually trading, matching it with your style of trading, whether or not you've got time or no time to monitor it too much. If you don't, then you want to look into pending orders as well, planning your trades beforehand, that limited time that you have. So hence the reason we're here to actually help you guys of, both skills as well as managing your time to be able to trade and learn as well. So hence the reason you've got, as members, you've got full access on the specific videos that I would draw with entries and exits as well, so that you can actually watch it beforehand, before going to work, and just do pending orders. So it's catered for the busy people as well. My style of trading, especially with patterns and price action, I'm all for pending orders so that I can spend my time doing other things. But it doesn't mean that you won't be trading a lot. You could be putting loads of pending orders, but then we want to measure the risk as well with your risk appetite. So now we are on the 4-hour chart for the USDJPY, and that's the current situation at this moment of time. We want more breakout. We want more clarity of the trend as well. So I would think that more participation of sellers would actually be there under the 108.20 psychological level. So that is where we could actually await and do lots of pending orders. But let us just confirm whether or not we would have participation under the 108 20 area. Okay, now ideally you want to look at 10 pips under the 108.20 and below to actually then ascertain or give us more confidence of a lower price action that would actually take place, or more participation of sellers. So here, for example, what we want to do is look into 108.20 area and look to the left and look at single mother candles, single bearish mother candles to look at. Then the most recent one that you can find is the one here that actually happened last year in June. So let's zoom in a little bit and let's just focus on that mother candle right there. And I want to lay out the closing price of that mother candle, and we could see that there may be a little bit of room for a sell under 108.20, because we see that 107.90 perhaps would actually be an ideal area of exit. But as you lay that out with the most recent candle, you can actually see that it mirrors another closing price of that candle as well. And then another one here, but then not exactly closing price, but closer to the low price. So that's a good indication. But if we also look at the reason why we want to exit at 107.90 and not leave it all too long as well is because of the 107.80 psychological level. So if 107.80, let's say, breaks out that rate zone that I've drawn at 108.20, you've got a little bit of room there, mainly because it might find reversal at the 107.80 area. And if we look very closely, you've got another candle, another mother candle right there that actually closes a little bit earlier, as you can see, right? So if we base on that one there, that is giving us another indication. I'm just going to color that blue just to indicate support. It may be a little bit complicated now, but let me just clarify that. Okay, so that is your support. And the blue line, I'll zoom in a bit. Give me a second. And that's another support right there. So I'm going to lay out the breakout zone in yellow for the downside. And it's just that it's a bit limiting at the moment. My guess is it might actually be either slow moving market. That's why it's not giving you that much of a momentum or a catalyst of more movement to the downside, or some surprises that might make it reverse. So either these two, but my guess is it's just a very slow moving in terms of data as well for a Monday for USD pairs, and I think we have got more room for other crosses, especially JPY crosses and not majors that are giving more interest to the traders today. So there you go. That's basically it. I'm expecting, if at all you've got more momentum at the downside or pushing the USDJPY to break out, then it would break out, but then have very limited movement to the downside, and I see more reversals as well. So let me just take a look here. On the weekly chart, for example, I can see some most recent one. It could take down the price to the 107.50s area, but I see a limit there. I see that a potential bounce would actually be there, but we need to await some news to drive that. So if at all, because at the moment for USDJPY, the whole drive to the downside is a bit limited for now. We don't know about tomorrow yet, but for now, it's a bit limited. So it might come down a little bit and then bounce upwards. But if it does actually bounce upwards, it might be encouraged by previous mother candles as well, like this area here, also this area here. So I see that there is a potential for an upward type movement, perhaps let's say an appreciation of move at least close to 80 to 100 pips, if at all we've got a catalyst, so we can gain that from the upside movement. At this stage, it's a little bit early for USDJPY, but this is what's going on at this moment of time. So I suspect it would actually come downwards towards the 108.20 area within 10 pips. Also or come down lower to about 10 pips or so, 108.10, and then reverse, but we don't know that yet. But if it does actually come under 108.20, come down lower than 108.20 to the 108.10 area, and then goes lower, and you've got the participation of bearish candles coming downwards, then yes. But from what I see, most recent as well, let's say if you go on to this side, you do get a participation of a bearish mother candle, but we have laid that out to be limited. So you do have perhaps about 20 pips or so on the downside to make, but don't get tricked into thinking that it will just boom downwards a lot. So it's a little bit of a catch-22 situation there between the buy and the sell, but you've got limited bit selling room to the downside for USDJPY. Okay, so we shall move on to Euro USD as well, just to give you a bit of an idea. At the moment, I've laid out a very significant support zone actually based on that bullish mother candle, and this is on the 4-hour chart. So it has appreciated up to this area. I would look at whether or not it would actually break out of the 1980 psychological level, but it's also a very significant resistant area there to the left. Again, more resistant. So it needs to break that out. And I'm looking at the 1.2000 area for Euro USD, just to give me more indication of what is to expect in terms of the direction of trend, because at this moment of time is just too 1.2000. Okay, it's just too unclear as to the direction at this moment of time. But as we go on to the daily chart and move a little bit to the upside, we've got some participation upon breakout. If at all we're looking at some catalyst, something is moving the euro to the upside, because now they're still battling with quite a number of issues intertwined between the COVID situation. We've got Italy now not doing well. We've got the second, third wave of various other countries within the Eurozone as well expected. Not very good. So the breakout of the Euro USD above the 1.200, maybe a potential, but you need to look at mother candles here, the most recent ones. I only see one here and another one here. Now, the shortest one would be here, this one here that actually ended at price there. So we wouldn't look at that one here, we just look at that one here. Now, it would actually look at a little bit of potential to buy a pawn breakout. If it does break out, I think you can look into 1.2010 as your buying price, and then look at exiting before the 2050 area, ideally 10 pips before, so 2040. So you've got a bit of a room in terms of 30 pips or so upon breakout for those short-term 20, 30 pips. Okay, but you want to limit yourself because it's just not too clear as yet whether or not it wants to take through further, especially from a technical perspective. But we need to marry that with fundamental side of it as well. So 2040 is the exit price right there upon breakout or upon entry at 2010. I'm just going to put that as a resistance line color right there, red, and then the 2010 entry area for a buy would actually be in green color right there, entry color, and 2010. Okay, there you go. So we've got a bit of a room there, but I wouldn't see it as, you know, a really nice trend to the upside yet. It's a little bit too early. We've got, because the 3 lines on the daily chart is just showing you a bit of sideways. If we go on to the 1 hour chart right there for Euro USD, it's just broken out of the 3 lines. 3 lines are moving to the upside. 4 hours got that entanglement. So this is telling me that the trend is not that clear at this moment for Euro USD. Maybe some movement to the upside may trick traders to believe, okay, there's an uptrend coming up with Euro USD because USD is really weak, but then it is still, maybe you just want to move sideways first. Maybe it'll just give you a little bit of a push to the upside, thinking that there'll be an uptrend, but I think it's going to move up just a little bit. You want to make about 15 to 30 pips or so. Yes, it's possible, but I see lots of resistance as well upon the breakout as well. So you want to be careful with that trade, whether it's to the upside or upside or downside for the Euro USD. So now let's take a look at our next pair. I've drawn this over the weekend and I've monitored Euro JPY since last week. We have got loads and loads of resistance, and this is actually quite a good pair to consider, mainly because we've got JPY on the upside really strong, and technically we're looking at euro having so many touch points on the resistance. You see that red zone that I've drawn between 130.50, which is a psychological level, up to the 130.60. So that actually means if you're looking to the upside for euro versus the JPY, you need to look at it above the 130.60 onwards as your entry price for a buy. But you know, you want to stay out from that at this moment of time, mainly because we've got not only all these resistance right here, just too strong a barrier for the upside of Euro JPY, but it has actually broken very nicely this trend line that I've actually drawn. So I want to, again, polish this trend line a little bit more, and we've got touch points here. We've got various touch points, which is good, minimum of 3, nice. So what I'm looking at is, because it has actually broken out of that trend line, usually the common sort of scenario is for it to break out and come back a little bit. So it might go up a little bit, but I want the upward to be limited, to be back to the trend line that I've drawn here. And usually what happens is it'll start to reverse from the point of breakout area, okay, roughly here at this yellow line. So what I'm expecting is further downside, but come up first a little bit, because now it's actually flirting and touching the 100 EMA, and that 100 EMA could act as a resistance area. Okay, so movement upwards like that, and then boom, coming down more. But as it comes down, it might find a little bit of support at the 200 EMA as well. So remember, the EMA lines could act as your support resistance as well. Okay, so that's for your Euro JPY. Okay, guys. that's basically it. I just want to go through very quickly with the GBPAUD, and I've drawn some nice areas, and this is for members that we will be producing this kind of layout where we would look into short-term as well, pending orders if you want, on areas in the Black Sea areas I've mentioned. So we've laid it all out based on price action, patterns as well, potentially. So here, for example, we have participated in a very nice downward type movement here previously, and that basically took price all the way down exactly as predicted based on the geometric pattern that we have drawn. So that was previously when we had that pattern going, we trade the pattern, but when there are no patterns or it's not advisable to trade patterns, it will be pure price action. But again, price patterns are price patterns based on price action as well. So this is where we basically use all these methods of geometric patterns right here. So that one there has given us a very nice C to D trading from this leg down to this leg, but also we've considered the centroid area of entry. I think at 79.90 area, that was a very nice trade, as well at 79.90 area, and then we took profit a little bit earlier at 77, I think it was 77.90 if I'm not mistaken. So that was about 100 plus pips all through, about almost 200 pips, 180 or so pips to have taken there. So hence the reason we use patterns to actually confirm that. But again, for the short term, right now for this week for GBPAUD, you're looking at trading 30 pips, 30 pips, 30 pips to the upside on there. And we'll be giving exact entries as well as stop losses as well to look at how you can actually gain that in the short term, but all on pending order. So you let that run on auto for you while you do your other things, and then you get the trades hopefully hitting all your TPs as planned. Okay, so there you go, guys. All right, guys, I think that's all I have for you guys, and look out for signals videos for our members, especially where I will do specific videos for specific pairs, giving you that daily up to about minimum 3 to 5 signals daily in terms of video signals, where I would present how I actually came up with these signals. I will also show you the results of them all as well. So for members, you will get that access to have all these. So only for $10.99 per month on the Bretton Academy subscription to being a member, you get loads of stuff. So you get your ebooks as well, and the ebooks on geometric pattern, as well as a discount for your certification course if you are thinking of it, an internationally recognized certification in geometric patterns analysis, or we call it GPS, Geometric Pattern Strategist certification course by the London Academy of Traders and Investors. Okay, guys, I think that's all I have for you guys today, and I will look forward to seeing you again in our midweek webinar on Wednesday, and also our wrap up on Friday. With that, guys, keep in touch, get in touch with us at Bretton Financial Trading Academy, BFTA, on either our YouTube channel. You can actually engage with us there, or even our Facebook page, Bretton's Facebook page as well, or just send me directly an email as well at kenny.simon@bretton.academy. Okay, guys, with that, I want to thank you and have a happy pipping week, a profitable one, and a geometric pipping week. Take care, guys, and we'll see you soon. Bye-bye.